Hello, investors. Welcome to the channel where I use technical analysis to find possible swing trades. Today, we're looking at Ulta Beauty Incorporated, ticker symbol ULTA. This is a mid-cap company with a market cap just over $20 billion. See, the share price is on the high side at $415 a share as of market close yesterday. Don't let that dissuade you. I do think this is a pretty good bargain at the moment. And here we have Ulta's annual chart, and you'll see that it is below all the major moving averages. In fact, they just had a earnings call, and the earnings call was a beat. Not sure if you can see it here, but they did fairly well, which for some inexplicable reason caused the share price to drop. Now, they offered guidance, which was only about a 9% increase for the next year. So the fact that the revenues are only increasing about 9% is what caused the share price to drop here. Anyhow, moving on to the RSI, you'll see that it's just bounced off the oversold zone, not quite an oversold anymore, and is ticking higher, but it's still on the low end. Both stochastics are oversold and have started to bounce higher. The volume chart shows an uptick in selling pressure, as you might imagine, from the depressed share price, but the pressure is declining and it's been replaced with green buying pressure. Now, the MACD shows a apparent bottom, and it does look like it's just starting to curve higher, but we are at the early stages of this turnaround on the MACD, and it is not looking like it's close to the bullish cross as of yet. Now, there is one other thing I'd like to look at here, and I'm going to switch back over to these expected earnings charts, and I think this is really interesting. If you look here, you have the earnings per share, revenue, and cash flow charts. As you can see, the 2021 to 2022 increase was about 40% increase in revenue. And then 2022 to 2023 is another 18% increase in revenue. But if you look at the cash flow increase, 2021 to 2022 went up 173%. So revenue increased 40%, cash flow increased 173%. Then the following year, revenue increased 18%, but cash flow increased over 25%. So the revenue growth does seem pretty steady. And in fact, they projected, as I said, a lower revenue growth, only 9% revenue growth for the following fiscal year. But the cash flow seems to drastically outpace the revenue growth, which tells me that Ulta is getting more and more efficient with capturing those funds that they collect as revenue. And if we switch back here to Ulta's chart, this is actually the 3-year chart. I'd like to point out something here. This right here, from about here all the way over, you see there's a section of the chart right in the middle here where the share price appears to have traded sideways. I don't know if I would exactly say that. That's a big range. It's about $100 range it's trading within. But it is more or less bouncing around within a certain range. And then we got that significant spike in cash flow where it increased drastically. And it brought the share price up here to well over $500, breaking $550 a share at one point, or a couple of points actually. And now the share price is pulled all the way back to $415 a share. And yet the projected revenue for next year is to be higher than the highest point over here when the share price was between $500 and $550 a share. So if the value of the company was, say, $525, $540 per share when the revenue was what it was last year, then why are we only valuing the company at $415 per share when those revenues are going to increase by apparently more than 9%? So this is just another piece of evidence that leads me to believe the shares are undervalued at the moment. And I will say there's other data I came across that showed the market share Ulta commands in the health and beauty industry is a little over 40% of the industry, which is a staggering amount, in my opinion. And that percentage has actually increased over the last few years. It's gone up just a little bit. It's only a few percent from like 38, then to 39, 30, 40, 41%, but it's still an increasing market share for the company. And if we switch over to a brief look at the fundamentals, you'll see everything looks outstanding here. The short interest is under 3%, and the institutional ownership over 95%. Again, institutional investors apparently see Ulta as an excellent investment opportunity. The company has no debt. Again, an amazing fact. And as I know I've said before, as Peter Lynch likes to say, he had never seen a company that has no debt go out of business. So that's excellent to keep in mind. The PE ratio is average. The gross margin is above average at almost 40%. The operating margin is 15.31%. Now, as a retail business, that is amazing. Most retail outlets I see when I do research here, they're operating on 4% margins, 5% margins, sometimes less. I know I looked at one recently where the operating margin was less than 1%. This 15% operating margin for Ulta beats out 97% of other companies in the industry. Again, that is outstanding. The return on equity is equally outstanding. Return on equity of 66%. It beats out 99% of other companies in that industry. And the growth rate is greater than 70% of others in the industry. So not only is the company growing, they're extremely efficient, and they are firmly entrenched in their market. So all this leads me to believe that the current $415 per share price is a little undervalued. But I'd love to know what you think. Please let me know in the comments below. And remember, none of this is financial advice. I'm not a financial advisor. I make these videos for education, information, and discussion. But if you got something out of the video, I would really appreciate it if you'd hit the like button and subscribe to help out the channel. If you enjoy this kind of content, please hit the bell notification to be alerted when new videos post. Also, if you'd like me to take a look at a particular company using the indicators I present here, just mention that in the comments, and I'll try to get to it as soon as I can. That's all for today. Thanks for watching, and good luck with all your investments.